T-minus 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. Ignition. Liftoff.
Hi everyone, and welcome back to another Seraphim live webinar. This time we'll be focusing on the Q3 Seraphim Space Index. This is a report that we publish quarterly, and we've been doing it since 2017, that draws on all the trends in the private investment sector from the space market globally. I'm pleased to welcome Dr Maureen Haverty. Hi Maureen. Oh.
Hi everyone.
And I'm pleased to welcome Zainab, Qasim. They're both investors from the Seraphim team. Hi, both.
Hiya.
And I'll run this session today in a Q&A format, and we really want people in the audience to ask questions as well. So please post them in the chat, and if they're relevant, we'll pick them up as we go on, but we'll also answer them at the end. And if anyone hasn't had a chance to look at the Q3 report yet, which we, I think, released last Thursday, I also posted that in the chat. So have a little read while this is going on, and please let us know if you have any further questions. But I will begin with you, Maureen. From some of your findings, you found that the total global investment has recorded 39% increase on the previous quarter. So are we seeing a resurgence in confidence in the space sector? And can you tell everyone why?
Yes, early indications are that we're actually starting to see some recovery. So that started in Europe in Q1 of this year. We had a bit of a resurgence in the US in Q2. And now overall, we really are starting to see that picking back up. So investment kind of reached its nadir at the end of last year, and it has been growing more or less every quarter since. And obviously that's a big uptick since last quarter. Why are we seeing more investment? I think basically, I think there's the issue is that actually, sorry, can anyone hear a terrible echo? Is there an echo or? Anyway, okay, so why are we seeing that pick up? So basically, I think people did not know what was going on with the world really throughout 2022. And it put a lot of investors off investing. You had a number of factors: Silicon Valley Bank, generally like a lot of market uncertainty, investors not knowing whether interest rates were going to rise or not. And we've seen some of that settle down. Obviously, we've got rising interest rates, which is a challenging environment for companies raising money in private markets. But we've more certainty about what's going on in general, and I think that has restored some investor confidence. And also, we're more than 18 months past more than 18 months past the last time most companies raised. So they're out being forced to fundraise, potentially at more attractive valuations, and that is increasing the amount of capital that's flowing into the market.
Great, thank you for picking that up. Zainab, there's a considerable shift in the distribution of investment between early stage and late stage deals. Q3 saw, you said, 82% of investment into late stage business as opposed to Q2, which was 63%. Tell us a little bit more about what caused this change. Oh, I think you're on mute.
I'm on mute. I think this quarter, it's been spurred on by a few large growth stage rounds. So to call out a few, there was Axiom Space, who raised 350 million, Sierra Space raised 290 million, and they're both really beyond Earth space infrastructure companies. And then on the downstream side, Mapbox also raised quite a large amount. So just those three alone will drive up the later stage investment quite a lot. So it's interesting that it's not just software or downstream companies that are being able to raise large rounds. It's actually really capital intensive companies like Axiom and Sierra that are not finding it too difficult to continue doing larger rounds right now. And so that's where that increase has come from.
I think just to add on Axiom and Sierra, that they're extremely capital intensive businesses. So for anyone that doesn't know, Axiom is building a private space station, and Sierra Space is building its Dream Chaser vehicle, which will provide transportation back to and from the ISS. Really capital intensive. So how have these companies managed to raise in a challenging fundraising environment? They're both revenue generating. So whereas maybe 2 years ago you'd launch companies who are raising very large rounds, but it's like, yeah, we're going to have to get to our Series D before we actually generate any revenue. That's obviously a very unattractive proposition for most investors right now. So where Axiom and Sierra have managed, a really challenging thing is managing to generate revenue early, Axiom with its private missions to the ISS, and Sierra Space, by being spun out from Sierra Nevada Corporation, brings large revenue generating projects with it, particularly related to its satellites program, for example. And both of those managed to quell some investor anxieties, which I think are quite reasonable, about wanting to raise a lot of capital and having nothing to show for it so far. So I think their strategy has proved to be the correct one in this market.
That's really interesting. And is there anyone else who's doing that or on the horizon?
Well, so I think you've got a lot of companies like Mapbox and the product companies, who are revenue generating, and it's easier for them to fundraise. No other companies, I maybe have a think that no other companies come to mind that I think they're doing that quite so well in the Beyond Earth category, which is really far out and very high capital generation needs. I will say that one of the challenges for space has always been is that, unlike, for example, enterprise SaaS, if you're an enterprise SaaS company and you go out to raise a really large growth round, that's because you've already demonstrated that you have customers, you're generating revenue, you've got product market fit. And then what you're asking investors is, okay, I know what I'm doing, give me more money and I will just do it better. Whereas if for a deep tech company, in particular for space companies, it's, I promise I will do really well with this money, and I promise my launch vehicle is going to be really amazing and it's going to make lots of money, give me money. And that's challenging in the best of circumstances, but in a constrained capital environment, that's really hard to get people to invest in. So what Axiom and Sierra Space are saying is like, we're already revenue generating, helping me grow.
Great, thanks, Maureen. And you also reported that Series C has tripled in the period, thanks to the rapid rise of the investment in product and build. Why are these two areas we're seeing specific growth?
Two different reasons for both of them, I think. Just as a reminder, what we have seen over the last 18 months is effectively a collapse in growth. So growth stage, maybe, C plus, there have not really been many very large rounds there. And any investors that traditionally invested in growth went back to the earlier stage. Maybe I have less money available. I'm going to put, more smaller checks into smaller companies and earlier stage companies. And Series C plus companies have found it really hard to fundraise. What we're seeing is they're back out in the market. They are fundraising because they have to, because they're reaching the end of their life cycle in terms of that previous funding round. So they're out, they have to fundraise. They might have reduced some of their valuation. The companies that we see that are attracting funding at Series C in particular, as you said, Leah, are build and product. So what are build companies? Build companies tend to make hardware. They tend to be closer to a potential exit. They don't need, in general, as many funding rounds or as much total capital before they're revenue generating, before they might be able to exit. So they could either be satellite components, rocket engines, they could be satellite manufacturers, all of those kind of companies where they're selling real things to real customers and don't need an awful lot of money to get started and to grow. That seems to be quite attractive for investors. And then you've got product companies who are often just software companies. They're using satellite data and they're building a product around it. They may or may not have their own satellites, and they can get to revenue generation and quite nice margins and profitability quite quickly as well. And I think both of those kind of companies are attractive investors at the moment, especially growth investors.
Thanks, Maureen. And anyone, if you're listening, you've got any questions, please keep them posted in the chat and we can pick them up as we go through. Zainab, we'll go back to you. It's great to see that seed stage funding has continued to increase in 2023, representing 10% of all investment in the last quarter. Are we witnessing a growth of new startups, and what areas have these startups been addressing?
Yeah, it's a really positive sign of innovation within the industry and healthy growth of new companies entering, even though it is a seemingly difficult environment to fundraise in. Seed stage companies will always have the highest number of investments. They've just not gone through the motions of experiencing graduation rates and sort of dropping out at the next fundraising cycles of like Series A and Series B. So they're always going to remain highest at seed. Like Maureen said, build companies are usually not as capital intensive. They're usually doing hardware and componentry. So it's not a surprise to sort of learn that the most amount of seed stage investments were done into build companies. A few to call out that raised significant sums was Reorbit, who are creating software-defined satellites, and Astranis as well, which is a platform for mission and spacecraft design. So they raised two of the highest seed deals, and they were both build companies. In terms of new areas of growth, Ariga Space is quite an exciting company that Seraphim were pleased to back as well as our first investment to launch. And they're using kinetic launch to essentially enable cheaper and faster launch for satellites. Yeah, great news. And I think Ariga were an accelerator company. Is that right, Zainab? Yeah, exactly. So we actually knew them before they incorporated, and it's been really good to now see them come out of stealth and raise 4 million. Yeah, awesome. I think the press release is on our website if anyone wants to read a bit more about that. Maureen, we'll go into talking about M&A now. So I think you're focusing on that now in every new index. While the M&A sector more broadly has suffered with M&A deals of venture-backed startups globally decreasing, SpaceTech deal numbers in the 12 months was up 45% year on year. What's causing this particular growth, do you think, in the sector? Yeah, there's been a number of really big deals that have been big deals in terms of actual size, and big deals as in it's real change in the industry in the last couple of quarters. So people will probably know and be familiar with AEI, who've invested, in Firefly, in Redwire, so that's a kind of a very space specialist aerospace company. And then you've had Advent International, who took Maxar private last year. So we've already had some private equity involvement in the space industry, but now we're starting to see much larger private equity companies get involved, specifically KKR and OHB.
So KKR is taking OHB, the German satellite manufacturer, or more than just Germany, it's Europe's third largest satellite prime, and they're taking them private, and they're also investing in RFA at the same time as well. And that's really, really amazing to see, because KKR are one of the world's largest private equity companies. So really, maybe generalist private equity companies are really starting to take notice about space. And they got a great deal on OHB in terms of the price they acquired it for. And I think that's generally driving a lot of private equity interest. A lot of valuations across, many markets are down right now, but in space they really are down quite a bit. And a lot of private equity companies are, taking a look at what's available and seeing what they can acquire for a good price. That's how private equity companies work. They take advantage of low valuations. So definitely there are some of the transactions we've seen. We've seen more new space companies acquiring, such as Planet has become a fairly significant acquirer at the moment. Firefly acquired Spaceflight. Who else have we had? Voyager, one of our portfolio companies, acquires quite a bit. Rocket Lab, so obviously, as part of its de-SPAC, acquired quite a few companies. So we do think that we might see a new space prime coming from this. So we know we've got various different space primes. We've got Boeing, we've got L3 Harris, we've got Northrop Grumman. Could we see maybe a smaller space prime emerging from one of those new space players? I think that could be kind of interesting. And something that we could also see is, I mentioned that private equity companies love low valuations. There's a lot of companies who've gone through a de-SPAC right now whose valuations are reasonably low relative to both their revenue and the contracts they have. And I'm sure there's some private equity companies taking a look at what they can acquire there.
Thanks, Maureen. We got a question from Donald. It's about different sources of funding. I don't know if you want to pick that one up, Maureen. Donald asked, does it make sense that build companies finance space assets with non-dilutive secured debt capital instead of VC or PE capital, for example? What's your opinion on that?
I think what Donald is getting at is why would you take in money from a VC to finance the building of hardware you're just going to sell on? Like in another industry, would you not just get a loan from the bank, or would you take some other financing that doesn't dilute your business? And I think, yes, absolutely. I think if someone is willing to offer something like that, that will be really, really helpful for a lot of hardware companies. In particular, a lot of build companies, even though we've seen this growth in build from VCs, a lot of build companies have really struggled to raise VC funding, not because they're not going to be really good businesses, not because their owners aren't going to make an awful lot of money, but unfortunately because of their total addressable market that they're addressing means that they would struggle to have the kind of exit that would make a VC sit up and take notice, that would help a VC meet their returns requirements. And right now, these hardware companies are like, I really only need maybe 1 to 2 million for R&D. And then, if I had an alternative route to finance, building my power electronics that I'm going to sell on, or my thrusters, or even my satellites, that'd be really attractive. I think that would be a great option, and that would be a great sign of the maturing of the industry. And, there's a lot of investors that hope, not VCs, as in, there's a lot of other types of investors, such as infrastructure investors, who hope that one day we get to a mature and low enough risk space environment that people can, infrastructure investors can invest in things like constellations or space stations or things like that. So absolutely really excited to see the maturing of the space industry and the alternative financing options that could bring. Leah, I think you're on mute. Sorry. So everyone, we're all muting ourselves to reduce echo, and it's causing a little.
Sorry about that. Yeah, we don't normally do that. Apologies, but yeah, I think there's been a bit of feedback, so we're muting. But here I am. I'm back. Right, Zainab, let's talk about geographies now. In this quarter, the UK was the success story in Europe, which is great to see, having doubled almost the total amount invested year on year to 326 million. I think you reported. Deal numbers were right, apologies guys, I can't get my words out either today. Overall UK investment increased by 22% in Q3 compared to Q2. What do you think the UK is doing so well and to record such impressive growth?
Yeah, I think there's been more of a push on the UK building up some sovereign capabilities. So that comes from launch as well. Multiple spaceports are in development all over the UK, and then also for UK to be able to design and manufacture their own satellites. So that large increases for the UK has mainly come from a company called Open Cosmos, who raised 50 million this quarter, which is the largest UK deal this quarter. And so they are a company that are basically trying to manufacture their own satellites from the UK. And so, yeah, I think that growth is just going to increase, and that's coming a lot from the UK government as well as UK startups, just sort of UK investors as well, also learning more about the space opportunity. Whereas, a couple of years back, or even at the beginning of this year, it was seen as a little bit too adventurous compared to the way US investors used to view it. So I think there's been a larger push from space tech companies in the UK also being more ambitious, as well as investors being more open-minded.
Brilliant, thank you, Zainab. And what about the US, Maureen? Deal numbers were flat in the US compared to the last quarter. What's going on over there?
Yeah, so actually it's a great story in the US, to be honest. So deal numbers were flat, so that means they were about the same as they were last quarter. So it's not like there were no deals. But we had increased investment. What does that mean? It means you had more growth investing. And the US really is the home of growth investing for space. If the US is not experiencing growth investing, it means in general the world is not experiencing much growth investing. So more money invested, and then it was pushed into fewer rounds, essentially, or pushed into the same number of rounds. So those round sizes were larger, and that's indicative of the fact that there were more of those Series C investments and just larger rounds, which is great. It's a sign of returning health to the market. If we had, not much investment but huge numbers of deals, that means you have a lot of, C deals, which are great, but we need some growth as well.
Great, thanks, Maureen. And what about, we'll go talk about Asia now, Zainab. The growth in Asia has accelerated with an increase of over 605. What areas of the space ecosystem is Asia starting to grow and lead in? And have we seen anything exciting coming from our recent launch of our accelerator over in Singapore?
Yeah, we have, but I'll start with broader Asian investment first. So a lot of it was driven by China, and then also some notable activity from South Korea and Singapore as well. Again, as with a lot of the UK companies and other regions, investment was driven in hardware, so a lot of build and downlink. And also, Asia's actually been really good at investing into launch. So the companies such as Perigee Space is a Korean company, and Interstellar Technologies, they're both Asian launch companies that have raised around 30 million. And then the other part of it is climate companies. So you mentioned our accelerator. On this cohort, we've got two companies. One is Kumi Analytics and one is Transitory, and they're both companies that are working on carbon reporting. So the largest amount of investment does come from build and hardware and capital light companies into Asia, but we're also seeing early stage companies that are focusing on climate.
Brilliant, thank you. We don't seem to have had any questions come in at the moment, but that must be a good sign that we've covered anything. But it's great to hear such positive news coming from the sector this quarter. Anything else you want to add, Maureen? Any final remark before we call it a day?
It's always so hard. I guess what we're seeing is that there is a fairly significant difference between how space VC and space M&A is quite different from general tech. So we've done quite a bit of analysis. We just said that actually M&A is up quite a bit rather versus general tech, which is interesting. You'll have seen in the news that investment bankers are weeping, there's no deals to be made, blah, blah, blah. So space is definitely seeing a lot of acquisition, a lot of deal activity. And we are seeing that while space investing is down, it is actually not down as much as general investing, which is also quite interesting to see. And then we're starting to see a returning it's great to like not be as bad as everyone else, which is nice, but also we're starting to see some return to health with a return to growth, which is really great. We've had 2 really great years of companies being founded. There's a lot of exciting companies coming through, but there's now companies that are starting to reach the need for meaningful rounds so they can accelerate their growth. They found their product market fit. They've got customers that they need to deliver and support, and they've got more customers they need to go after. And the fact that investors are starting to invest in those stronger companies is just really reassuring, and it's good for the industry overall.
Fantastic, great to hear. And if anyone thinks of any questions post the live, please post them in the chat, and the guys will be happy to pick them up after. And we're really pleased to talk to everyone, welcome everyone today. But thanks again.
Cheers, Erin. Bye.
Bye.